Good evening, friends. I hope you're all keeping good and healthy. Welcome to the last series of sessions on the financial management, which is on a very important topic, that is working capital management. I'm sure you have been enjoying all the sessions till now and have been working hard to prepare and do a lot of practice. And I can see a lot of excitement already on the chat box, on the Q&A. And I'm expecting a good interactive session as we generally always have. So this session today and day after tomorrow, we are expecting a lot of fun, a lot of activity, a lot of energy on the essential elements of working capital. So let's deep dive into some important aspects. Now, I believe all of us understand the relevance of the working capital. The last time around I met you guys, we had a good enough discussion on the importance of working capital when we were talking about the investment decisions, right? So we talk about the working capital at the beginning of a project is required, and when the project is complete, the working capital could be released. Now we actually talk about in a day-to-day operation, what is the essence of working capital? So we all understand that working capital is nothing but a difference between the current assets and current liabilities. But the same side, we not need to understand that if you just look at the name itself, this is the term working. So that means this particular capital also representing the short-term source of financing for any business. This helps us to meet your day-to-day operations basically. Now, when we are looking from a formulation of working capital here, that is your current assets minus current liabilities, let's quickly have a check to our understanding of our current assets and what is a current liability. I just would like to invite your thoughts here on the Q&A. If you guys can tell me, what do you mean by current asset and current liability? Just quickly in a small phrase. So what is a current asset? What is a current liability, guys? Good evening, all of you again. I can see a lot of students joining right now. So what I'm expecting to see is on the Q&A box is your understanding of current asset and current liabilities here. Okay, let's see who is the first one to respond. Okay, so I guess most of you probably are in the process of replying, and I'm sure most of the responses with respect to the current assets and current liabilities with respect to the time frame, isn't it? Less than 1 year. We're talking about current asset that would be used within a year. Okay, so I see a first response coming in from Vasu. Vasu says current assets means which can be converted to cash within a year, which can be used, which can be realized within a year. I guess apart from within a year, it is also important to use a operating cycle, right? We generally talk about within a year or an operating cycle. Now, okay, I see more responses now. Charu is replying current assets which can be realized within a year, current liabilities which are payable within a year. Okay, and the same response is coming from Madhuri as well. So Madhusri, sorry. So we need to understand also that while you are focusing on the 1 year definition, we need to talk about something more on current liabilities front. A very important aspect when we are talking about current liabilities, especially apart from the 1 year of current liabilities require, let's say, okay, just let me have a look at some other definitions also. So Tanu is replying liabilities of not more than 1 year. So yeah, I think all of you have just given me a definition with respect to 1 year, right? But what I'm focusing is that is absolutely correct. When we're talking about 1 year, I would definitely agree with you. But more than that, its understanding is expanding beyond only the time period requirements, that when we are settling the current liabilities, what is the source? So let's take an example quickly. Let's say there is a short-term notes payable here. Short-term notes payable. And you're preparing the financials on 31st March. The due date for this is, let's say, 30th of April, guys. Due date is 30th April. I guess everyone would be agreeing that it would be a current liability. Everyone would be agreeing this is current liability. Okay, Pooja, Vasu, Sandeep, I see your responses also. You guys have given examples also. That's good. So Sandeep has given examples also like debtors, inventory, and for the current liabilities, creditors, and all. But I want to also ask Surbhi, yeah, absolutely correct. I want to ask this particular example. This is a current liability, right? But what if I just tell you that this company on 28th April took a 3-year loan to settle the note payable? Guys, any thoughts now? Any thoughts? If I'm talking about this particular example, uh, any thoughts would change? Would you like to continue to classify this notes payable as a current liability? I guess no, right? Because this is neither requiring current assets nor creating another current liability. It's actually resulting in creating a non-current liability. So you might want to look at a reclassification options. But anyways, that's more from an understanding perspective. But broadly, for our purposes, we will be definitely focusing on the 1-year definition, the operating cycle rule, and that's what we'll be kind of going across with the various elements of the working capital itself. Now, one more important aspect with the terminology being used, sometimes we use a term called gross working capital, and sometimes we use a word called net working capital. So if you're using only working capital or net working capital, that means it's a current assets minus current liabilities. But when we are looking at a term called gross working capital, we are looking at current assets only. Yes, Saurabh, Pooja, absolutely correct. So that was a reclassification. The example I took, that was more of a reclassification. Now, interesting thought. When we say that working capital, right? Working capital is a good short-term source of financing, right? Day-to-day operation. It helps us to meet day-to-day operations. Couple of things I would like to talk about here. One is we always know from our earlier accounting days, we were always taught that, okay, a good current ratio or ideal current ratio. We say working capital is current assets minus current liabilities. Current ratio is current assets upon current liability. An ideal current ratio of 2:1 should be there. We have always been taught. But my point is working capital standardized across businesses? I am not sure. Can we say that, okay, too much of a working capital can also be harmful, right? Over investment in something like inventory can be harmful. Now, I want you guys to just think over to a nearby market. I'm sure all of you must be having some nearby market. You guys need to give me a simple example of two particular stores, shops, whatever. Name of two particular stores or shops, business houses, whatever. One of which is having a lot of inventory, a lot of working capital, and another one is absolutely not having any working capital or very minimum amount of working capital, and both are absolutely solidly profitable. You always see people over there, always crowded, equally successful. Can you give me example of two particular shops nearby your locality? Any thoughts, guys? Just think over. What I'm saying is think of two shops where you always see people. Of course, I'm not talking about pandemic. Of course, there were exceptions. So I'm not talking about the lockdown situation. In a normal situation, two particular shops, equally profitable, equally crowded. One is relying on too much of a working capital. Another one doesn't require working capital. Let's see what are the examples you guys want to give me here. Okay, perfect example. But Vrinda, while you give me an example, are these examples of both the cases or just one case? You're saying grocery and medical. Those are successful, but both of them might be needing a working capital, right? You need a good amount of stocking in a grocery store, in a kirana shop, and a good amount of inventory in terms of medication, in terms of medical also, in the medical pharmacy. So Siddhinath replying with Big Bazaar. Amazing. So Big Bazaar, you need a good inventory. Okay, so Surbi is very particular in her response. She says, more working capital in a retail shop, less working capital in a doctor's clinic. That could be a good example, because again, we're talking about a business versus profession. Even if we talk about within the business, okay. Now, Madhushri has a different ideas. She is probably kind of diverting my mind from a working capital to a pani puri shop. She is telling me an example about a pani puri shop which has many customers and no working capital at all. Amazing answer, amazing reply. That was an amazing example. I will try to stick into the lecture though, but yeah, my half of my mind is now diverting to a pani puri right now. But anyway, that was an amazing answer. So pani puri, less working capital, always crowded. And another example she said is a Bata showroom. You always need so pani puri, no working capital, profitable. Bata showroom, you need a working capital. I guess I think any locality you would definitely see these days two shops, Domino's and a pharmacy. Domino's and a pharmacy, right? So generally restaurants or the food businesses can't afford to have too much of a stocking up because of a perishable nature of the business, and pharmacy will always require a significant working capital over there. Okay, so that is exactly what Vasu said. Vasu said food shops don't require too much, while garments and other shops require. Okay, Saurabh is taking my example. He says coaching doesn't require that much of working capital. That's amazing. So guys, absolutely correct. So good round of applause for all of you guys. Absolutely wonderful. So that means with that interaction, you guys agree that there are factors that could determine the ideal working capital levels, guys. We can't just restrict ourselves that okay, 2:1, okay, or this is the ideal working capital. There may be an ideal working capital, but that would depend on the various factors. And what are those factors? We'll talk about that in a short while, right? So even within the working capital, guys, we can also see, with respect to a time frame, there could be a scenario that you might be having some kind of a permanent working capital and some kind of a temporary working capital. Now, let's say if I start a business. You guys have been giving me example of garment store. So let's say in Delhi, in Connaught Place, I want to start a business of a multi-brand store. So for setting up my showroom, I might have to initially inject a permanent working capital, guys. I don't want customers to come into my showroom and all the racks are empty, right? So that's a permanent working capital. Let's say I need 20 lakhs. So that 20 lakhs stays invested. But what about peak seasons? What about sale season, guys? I might need to temporarily adjust the levels of working capital. So permanent working capital more or less stays invested, and the temporary working capital is basically depending on the seasonal demand, guys. I hope everyone is on the same page on this one. Okay, I think I can see examples coming in, guys. Earlier it was pani puri, now it's a samosa shop. Great. Anyways, so let's move from evening snacks to a significance of working capital here. So that means majorly what we're talking about here is adequate working capital may not be only restricted to a short term, because we have a permanent working capital requirement in a long-term perspective as well. Now, we talked about that in the capital budgeting decision also, when we were talking about the investment decisions earlier, that there could be a financial outlay involved. Apart from that, there is a working capital also required initially. If you remember my two cases, guys, I talk about two cases. One case was there in a capital project, you require additional working capital initially. And another case, I said that, okay, if it was an automation project, what if your initial working capital was actually reduced? If you remember, we talked about of two particular cases in working capital adjustments. So we are kind of correlating that discussion here. So that means, why do we have a increased working capital requirement? Of course, if you are going into a special project, we might have to increase our volumes of production. So you might need a additional stock. With the thought process of increasing sales, we might want to relax a credit term. Our debtors may go up, right? So as our scale of operations are going up, we might need a higher working capital, guys. So that is, I think, pretty much straightforward. Now, this is the slide I was talking about, a very important one, which talks about what are the optimum working capital? Is there a standard definition of a current ratio of 2:1 or not? These factors will determine whether I need a 2:1, 1.5:1, or even 3:1. Nature of business. So the first example, I think we all talked about that, right? Restaurant versus pharmacy. So that is the nature of business, the major factor. Types of products, as I said, durable versus perishable. Operating efficiency, again, to bring in more efficiencies. Again, you don't want too much of a working capital, kind of, stored locked in the business. If you remember your discussion in terms of ratios, guys, I hope you remember your activity ratios, right? Your turnover ratios. So if you you rotate your business, rotate your working capital fast and fast and fast, you probably want to bring in more efficiencies with least working capital invested. Similarly, we are talking about other policies with respect to the individual elements of the working capital. Let's say current assessment will be talking about the debtors, inventory management, cash management. All these factors will be important. Similarly, what about the availability? We are talking about our requirements. We can also think, okay, what is the availability? That could be one factor, isn't it? Let's say the short-term financing options are not too good. You're having a higher rates in terms of short-term financing. You may not be wanting to invest too much on working capital in that case, right? So again, the factors which are apart from the nature of business could be many. So we're talking about a manufacturing policy. That is always the case. As I said, in terms of permanent and temporary working capital, we could be looking at something called a seasonal demand. A seasonal demand, guys, right? So talk about the Raksha Bandhan time, the Diwali time. So you know that, okay, that you might want additional working capital during those times. So these are the factors that definitely play a larger role, guys. Now, in terms of managing working capital, okay, now we understand that, hey, there is a scenario where we are thinking that working capital could be required high, less, depending on the nature of business, depending on other factors. But we need to decide whatever working capital we have, we need to ensure that we manage it to the best of the perfection. And that management involves 3 E's here. So we're talking about effectiveness, efficiency, and economy. Now, when we talk about these 3 words, effectiveness, efficiency, and economy, always remember that effectiveness talks about achieving your objectives. So effectiveness is more of a what here. What needs to be achieved. Efficiency talks about how you want to achieve that. And economy is in terms of cost. Make sense, guys? Everyone okay? So working capital management is talking about effectiveness. So if your objective is being met, so your working capital policy could be effective. But if let's say you wanted to increase the sales, guys. Let's take an example. If you wanted to increase the sales, and what you are doing is you're reducing the credit term for the customers. So the customers might shift to the competitors. So did your objective met? No, your objective was not met. So what is actually defined by the objectives, intended objectives? How you are doing it, how you are achieving it is efficiency, and how much cost of financing is there, or at what cost you are able to manage that. That's economy, right? Now, it's always a vicious circle, guys, when we talk about too high a working capital or too low working capital. And the vicious circle is basically dependent on these 2 factors on your screen. So we're talking about something called liquidity and profitability on one hand, and then we also talk about investment and financing aspects. So majorly here we're talking about, okay, whether we want to have more liquidity or we want to have a profitability or we want to have a trade-off. I think most of you might agree that majorly various business ventures would want to have a balanced approach, right? Let's talk about this one by one though. What do you mean by liquidity? What do you mean by profitability? Does it mean that, okay, having more liquidity can impact my profitability or vice versa? Let's talk about one by one. Now, one of the components is in the working capital, we know as part of the current assets is our inventory. Now, if I focus on a higher level of inventory, guys, higher level of inventory, what are the pluses, guys? Higher level of inventory. That means I am ensuring that whatever customers want, the product is always available. We have different varieties. We want to encourage more sales. More sales means resulting from a lesser stock out. Imagine you are going to a bookstore for a particular book one time, two times, three times. Every time when you go to a bookstore, they don't have that particular magazine. You may not go over there again. So you don't want to end up into a stock out situation. That, hey, sorry for the the situation here. So you want to keep a higher stock, higher level of inventory to achieve lesser stock outs and hence more sales. That's profitability. But if we want, hey, we don't want too much investment in the inventory. We're focusing on liquidity. Now the problem is, this could be a situation where customer comes to you and you don't have the stock. Imagine you are standing in the queue of Haldiram. It has happened to me a couple of times. Right in front of me, the person is ordering a pav bhaji, and next is my turn, and the cashier tells you, sir, that was the last order, sorry. Right? So some students are thinking only you could tease me with a pani puri here. But anyways, so we talk about a situation that, okay, if you want to keep a lower level of working capital, again, the problem could be that, okay, the customer may not get the product, and hence you may achieve a liquidity, but in terms of not investing too much, but you may end up losing the reputation. So that means you want to balance out. You want to balance out the profitability and liquidity, right? And there are techniques to achieve that. We will be talking about those techniques, guys, eventually, when we will be hitting on each of the elements over here. Now, that means one of the techniques, for example, we are looking at, inventory is economic order quantity, just in time. We're talking about that a little later, though, in detail. Now, next is an example of a receivables, guys. In receivables, what we are talking about, okay, I was seeing some responses here from Vasu and Charu. Yeah, absolutely correct, guys. So Vasu says low chances of stock out. So we are talking about a higher level. And then a profitability, but not liquidity. Absolutely correct, guys. So that was awesome. So in receivables, now what are the higher advantages of a higher level? Higher level of receivables means probably you would have increased the credit terms to encourage more sales, right? That definitely could be the case. Higher credit period, but yeah, but the problem could be a bad debts over there, right? There could be a minuses as well. Now, on the other hand, if I lower my credit period, now then that means my customer may go for another vendor who will be giving a larger credit period. I may lose some customers. So those are the plus and minuses. So that means when we will be talking about receivables management, we'll be talking about what is the ideal credit policy. Should we give a 15 days? Should we give a 30 days? Should we give a 45 days? It will depend on various factors. Factors like opportunity cost, factors like bad debts, right? So we'll talk about those in terms of managing the receivables as well. Similarly for cash and cash equivalents, guys. So if you want to keep a higher level of cash with us, in terms of probably ensuring that my payables are met on time versus a lower level where, I want to always keep my cash invested somewhere, whether it is a marketable securities or some other short-term projects. The problem there could be, that could hit on that, I may not be able to meet my short-term or some of the expenses. I may have to defer some of the needs. So I need to manage the cash and cash equivalents as well. Similarly, prepayments and payables have their, pros and cons. So we will talk about this, guys, when we'll be talking about the individual components, about the trade-off between the profitability and the liquidity. On the other hand, we were talking about the other aspect, that is investing in financing. So as the investing suggests, okay, how much and financing is where from, right? So investing is how much and it's where from. Guys, have we discussed, by the way, how much and where from? I think I happen to be the person who talked about those both the things, right? Where from, when we talk about cost of capital, right? And how much, probably depending on our investment decisions or other requirements, right? So that definitely will be kind of in terms of factors driven by the organization policy. But also when we talk about the organization policy, we need to understand one thing, that yes, an organization could have 3 different types of policies with respect to working capital. One is aggressive, one is conservative, and one is in the middle, moderate. Now, you might be thinking very logically, aggressive working capital. Okay, I need more and more working capital. Guys, am I correct? Aggressive working capital. I need more working capital. Is it true, guys? Aggressive policy. Would it mean more working capital? No, it won't mean more working capital, guys. Aggressive means that I am too much, pretty much efficient, or I'm pretty much able to take a little bit of a risk that okay, all the activities are operating efficiently, and I would be needing a minimum amount, the least amount of working capital instead. And that is why I'm saying that I am talking about in terms of an aggressiveness. Okay, I am okay with a lower level of working capital, right? So that is an aggressive policy here. So lower level of working capital in terms of less inventory, strict credit policy. So this is more of an aggressive policy. But when we look at conservatism is like we are scared. We always want to have a cushion, right? We are conservative in approach. And in terms of conservatism, we know that, okay, we need a higher working capital to be available for any kind of a contingencies, more inventory, more liquidity, and that means a higher current ratio. Both the policies have their plus and minuses, guys. So in terms of aggressive working capital, of course, the positive is you are having a less blockage of funds. But the problem is that will you be able to grow at a rapid pace? Now, one may counter argue that okay, bringing in too many efficiencies can actually help you to achieve growth also. But there are risks on the other hand that okay, hey, what happens if there is a stock out? If you don't have enough working capital. So there could be some question marks on availability of stock or availability of better credit period in terms of the competitors. Aggressive is good, right? But there could be problems. So in terms of conservative though, there are similarly an advantage is more that okay, you have availability always. That means you want to boost up your sales because you want to build up a reputation that okay, you're giving a good relaxed credit terms. You always have the products, you always have the variety. But the negative in terms of holding excessive working capital is, of course, opportunity cost. You are blocking too much funds. What about increased level of debtors over their customers? You are risking bad debts. And that's why the center approach is a balanced approach. That's where we are looking at a moderate policy, which balances our risk and return. And that's where we are looking for efficient approach, or also called as a midway approach. I hope this is clear to everyone. Aggressive policy, moderate policy, and conservatism in terms of the working capital management. Okay, so this is again a graphical depiction of all the three policies. Of course, at conservative level, you have the highest, and in terms of the aggressive, you're talking about the lowest, right? So one more way to look, your requirement with respect to the, the current, your current assets or a working capital requirement is with respect to our investment in the fixed assets, guys. Again, the idea here is that our objective of the financial management was to wealth maximization, right? To maximize the shareholders' wealth. Now, that means probably the requirement of current assets, we need to correlate that whether we are following aggressive policy or conservative policy, we might want to relate with respect to our expansion plans. Now, that means if we are looking at this particular ratio, what does this indicate? Current assets to fixed assets. There could be two possibilities, right? I have a higher ratio, I have a lower ratio. Okay, so my point is that if I'm having a higher current assets to fixed assets, that means I'm having a higher amount of current assets. That means I'm following a conservative policy here. So higher ratio would indicate a conservative policy, but a lower ratio would indicate a aggressive policy. And on the other hand, it happens to be a inverse relationship when we compare with the return on assets. Why is that so? Return on assets, what's the formula, guys? Logically, what's the formula for return on assets? We talk about EBIT upon total assets. So we are talking about from a profitability perspective, right? So now my point here is in terms of a total assets, let's assume that we're talking about three different scenarios, and what we are looking at a same level of EBIT, 2 lakhs in each case. But what we are talking about that my current assets are increasing, and hence because of that my total assets are also increasing. So what would be the current assets upon fixed assets ratio impact when I am increasing the my current assets? Remember the mathematical equation in terms of ratios. I'm sure all of you have done the ratio analysis chapter. Okay, I have a question here coming from Madhushri. Madhushri says, why a high risk of debt in conservative level? Madhushri, you're talking about this one? Bad debt. That was a high risk of bad debts, right? Because, in the conservative approach, so Madhushri, what we are talking about, a higher level of working capital, that means more debtors. In terms of receivables, if I'm talking about a relaxed creditor, that means more customers will be interested in buying from you. Your credit sales will go up. But having said that, how will you ensure, except for a due diligence, that there could be a possibility that few customers fail to pay? We're encouraging too much of a credit sales. So that could be a risk as compared to the aggressive policy. Okay. So I hope that is clear, Madhushri. Okay. So now I was explaining about the mathematical equation with respect to the this ratio of conservative and aggressive policy. Now, in any ratio, we know that if a particular ratio is less than 1, now my current assets and fixed assets ratio, current assets to fixed asset ratio, let's talk about a situation where we are thinking of my current assets are either less than fixed assets. Very seldom it could be possible that my current assets are actually exceeding the fixed assets. Generally it may not be the case, but we can think of that extreme. So in this example itself, we had current assets less than the fixed assets, and we expanded on. So what was happening is, one hand I'm looking this ratio, current assets upon fixed assets. On the other hand, I'm comparing a ratio with respect to return on total assets. So we're talking about return on total assets. Now, because my current assets were increasing, my total assets were also increasing, and my return is same. So what would happen is my return on total assets will go down. But current assets to fixed asset ratio will go up. That's the relation we are talking about, guys. That's the relation we are talking about. That my current assets upon fixed assets will always have inverse relationship with respect to the return on assets. It's more of a mathematical approach though, but we also need to understand from an operational efficiency standpoint that yes, having, why we are saying that in terms of having a higher current assets may impact your return on total assets. So that is another way of looking at it. Okay. So now let's move to a very important aspect of our working capital discussion, guys, in terms of the requirements, in terms of the organizational nature of business, and also in terms of the prediction of our achievement of objectives. Okay, so a question coming in here, that can we depict correct position in absence of current liabilities? That is a very, very good point, Siddhinath. Generally, when we are talking about the working capital, and I think the question you have asked, I will be answering that right in this slide itself, that we will be focusing on the entire working capital cycle, which also includes our current liabilities as well. So don't worry, we'll incorporate the current liabilities requirements also. But right now, with respect to the same, I want to focus on something called operating cycle. You remember when we talk about the current assets and current liability definition, guys? You were focusing on a 1 year parameter, but I guess I was also telling you that we also see operating cycle. Generally, we say that Current assets are those assets which are used, consumed, sold within 1 year, or operating cycle, whichever is longer. So we generally focus on the current, like more or less. Generally, the year is a longer, and that's why you guys generally remember it as 1 year. So very seldom could be a case where operating cycle can go beyond a year, but that could be possible depending on the nature of the business. But what is my operating cycle? That means now, also known as working capital cycle, we understand from the start of the business to the end of the cycle. Like when we are thinking of, let's say, a manufacturing company, is first of all, it all starts with purchase of raw material. Do you agree? Purchase of raw material, guys. So we're thinking of, okay, hey, I am talking about a raw material. I am hiring some labor. Then I'm talking about starting about manufacturing process. That could also include some overheads. Then there would be resulting in a finished goods. Now, finished goods may not be immediately sold. So there could be some time between finished goods and the actual sales. And after sales, apart from the cash sales, there could be some time in terms of the receivables collection as well. So we're talking about receivables collection as well. So you can see there is a time period involved, isn't it? There is a time period involved. But I have a question for you guys. We are taking so much time, right? Let's say this raw material was purchased on a 1st April. And by the time the debtors are paying you is, let's say, on is around 20th of May. You purchased raw material, you hired labor, you started production process. It took around 15 days to produce. It took another 2 weeks to kind of, find out the customers or, kind of effect the sales. And then another 2-3 weeks for collecting of the receivables. So on 1st April, we started. On 20th May, we are getting our collections here. Now, my point here is we are actually waiting for 50 days. Is there anything, any comfort, any grace period we are enjoying also? All this is the time period which we are actually waiting for once we injected the cash from the purchase of raw material to the point where we realize the cash from the sales of finished goods. But my point is, throughout these 50 days, was there some other period that we were on the receiving end rather than on the providing end? Let's see what are the responses. Any kind of a days of grace we also were given by someone? Rakesh had a question. Please tell if the net worth and the working capital are same. So working capital is only in terms of current assets and current liabilities. Net worth, it's not only with respect to the current assets and current liabilities. What is net worth, guys? Net worth is not working capital. How do you define net worth? So we are talking about net investment or valuation from a company's perspective, guys. What do you think? So working capital is simple, current assets minus current liabilities. But generally the net worth would be assets minus liabilities. It's not only included the current. Net worth would be entire capital invested. Okay, so coming back to my question, guys, we were talking about a raw material to collection of the receivables. Any time period we also enjoy? Okay, I saw the response from Prema and Charu that credit purchases. So guys, that means probably this time around, during this time, there is some period we also enjoyed. When I'm kind of highlighting in the green, let's say this is the section we also enjoyed. The section in the red and the section in the red was our waiting period, but section in the green was waiting period for someone else because we also might have done some credit purchases. Guys, I hope everyone with me on this. Okay, Charu, Pooja, Madhushri, all are giving awesome responses. Absolutely correct, guys. So that means can we say probably in terms of the operating cycle, we should be not including the entire red portion? So let's say if I'm talking about those 50 days, I also got some period by the creditors, let's say 15 days. That means my working capital cycle might be in effect 50 minus 15 or 35 days. Can we say that? I'm sure you agree with me, right? Because we are, see, once we are into that cycle, we might be taking some time for collection, but we also are enjoying some time to pay back. And that is why we will net that green zone off from the red zone. Right? So this is exactly is what we are talking about in this case. So from a cash to a raw material, labor, WIP, finished goods, receivables, and then again cash. That is why the operating cycle is defined as a very wonderful equation here. Raw material storage period, work in progress holding period. Guys, work in progress holding period, like how much time generally the finished goods take from initiation to the completion in terms of WIP. Finished goods storage period, as I said, it's not that today I complete a production, tomorrow I'm sold out, right? Debtors collection period, receivables collection period, and then whatever is the time allowed by my suppliers, I will reduce that, guys. So R plus W plus F plus D minus C. Guys, I hope this is clear. We will now understand each of these elements though. How do we calculate raw material storage period? So we'll know that, okay, generally the factors like, how many days you require for ordering and all that thing, or probably as per the policy, organization policy, how many days of inventory I want to keep in, how many days of stock we need for the finished goods. So all that is, there are a mechanism with respect to the annual consumption or an annual demand versus the requirement. So we'll see that how do we calculate these in number of days now, and that is a first part which is very important from a practical question perspective. You will be broadly looking at three classifications in terms of practical questions in this particular topic. One with respect to operating cycle, another with respect to typically a working capital itself, calculation of a working capital requirement, and the third type would be element specific. It could be cash budget related, it could be a credit policy related. So these are the three broad categories in which you may get a question or more than one, right? So I hope this particular formula is clear, guys. You need to understand that, okay, we include the raw material, WIP, finished goods, receivables, and we adjust the time given by our creditors here. So let's talk about a small example here. So Dhoni and company holds raw materials on an average for 45 days. It gets credit from the suppliers for 30 days. So production process needs 25. Finished goods are held for 15 days and 45 days credit is extended to the customer. So we add the 45, 25, we're talking about a 15 and a 45. And what we adjust is the 30 days credit given by them. So hence, my operating cycle is talking about a good 100 days here. Okay, a quick question, guys, from you. Would you, as an entrepreneur, like a smaller operating cycle or a bigger operating cycle? Or a longer, I should say. Would you like to have a shorter working cycle or a longer working cycle, guys? What do you think? A shorter or a longer? Okay, I think I'm getting Vasu responding a shorter working capital. Because see, I would think it from a perspective that I have invested some money in the business, right? Like everyone telling me shorter, right? Even Hina replied with a shorter working capital. I think I agree with you guys, because see, the shorter the operating cycle, you will have more number of operating cycles within the year. That means again, if you rotate your hands, these are your resources, guys. That the faster I rotate, that means shorter the operating cycle. That means more profitability, right? Everyone with me? Okay. Now, we all know, I think who better than the chartered accountant students, right? Time is money. And I guess everyone has heard that quotation, right? When something is for free, you are the product. So again, time is money. So we need to understand some correlations here. If you collect the receivables faster, you release cash from the cycle. So what we mean is that probably you are able to churn the cash collection quickly. But if it is slow, you are holding the cash in the operating cycle because you are taking time to collect. Now, probably in terms of inventory, if I sell the inventory faster, of course, I am kind of freeing up cash. And then if I'm keeping up, my cash is blocked into that inventory. And my cash is blocked into that inventory. Right. So now let's talk about these particular days. Now, with respect to all of these, we'll look at some formulas here. Okay, there was some questions. Just give me a second. Surbi was asking, is it for a manufacturing company? Yes, Surbi. We're talking about for a manufacturing company. Of course, for trading and also relevant components will not be there, right? So we're not talking about the raw material or a manufacturing time for a retailer. Charu says shorter because it may increase our profitability. Absolutely correct. Vivek and everyone is okay. Madhushri, you wanted a longer period. Are you sure about that? Probably the only reason, Madhushri, you said because you get time to repay your creditors. Honestly speaking, that is the element you are reducing from the operating cycle time. Na? That is a minus C, credit period allowed by the creditors. So that will actually mean that shorter the better, right? If you want to take more time, see the point is, if I go by your logic, if I increase the C here, of course my operating cycle will go down. Yeah. So I hope this is okay. No, that's okay, guys. Even if you are analyzing in a different manner initially, once you understand, I think things are more clear. Okay. So you're talking about these formulas. Okay. One way to look at it is, okay, oh gosh, we have to remember all these formulas. Trust me, we'll go through some examples here. You will understand, you will realize that, okay, the rectification or the memorization of a formula is actually not required. A basic understanding will help you calculate. We'll see that. So let's say a raw material storage period. How much is that? So we're saying that, okay, average stock of raw material upon average cost of raw material consumption per day. Okay, that means probably what we're talking about is average stock of raw material. So let me explain you one formula and you will understand. What is the average stock of raw material, guys? We are talking about, let's say, cost. Can I include this in terms of a perspective that, let's say, I want to keep a raw material for, let's say, 25 days. I'm talking about in terms of days, guys, right now. In terms of days. Because we are talking about cycle. We will be also moving to a point where we'll be calculating the working capital. There we'll be calculating the raw material in amount. In the cycle, we are talking about in number of days. So all these formulas are talking about period, guys. We're talking about days. So let us say I want to have 25 days of raw material. So that means average cost of raw material would be nothing but 25 days into daily charges, daily stock consumption charges. And that's what in the denominator. So that means if I knock this off with the denominator, I'm getting 25 days. So this is nothing a scientific formula. So basically what we are saying is that in the denominator for all these formulas, you see the average cost per day. But do we need to calculate that? Do we need to remember that? We will see this when we talk about these examples. So raw material storage period, WIP storage period or a holding period again is a average WIP upon the average cost of production per day. Similarly for the finished goods and so on. So let's look at an illustration here, try to understand what are we doing here. But I think the easier way to remember all this is nothing but that in the denominator, you're talking about, okay, if it's a receivable, average credit sales per day. If it's a finished goods storage, average cost of goods sold per day, because COGS is related to the finished goods, WIP, production per day. And in the numerator, you're talking about the relative average parameter. Denominator is per day element. Look at that. Per day cost. All the denominators have per day cost. But the parameters change. If I'm talking about raw material consumed. If I'm talking about production or a WIP, I'm using a production. If I'm talking about finished goods, I'm talking about COGS. If we're talking about receivables, we are seeing credit sales. The relative parameter gets changed, but otherwise all the denominators are per day, and we are dividing that basically that is an average inventory, average receivables, and so on. So let's look at an example here. So we need to calculate the net operating cycle period and number of operating cycles in a year. By the way, there are two particular requirements here. So net operating cycle period is one, and number of operating cycles in a year. Guys, do you agree with me that if we are looking at the 360 days in a year, if we get the first question, the second question would be taking 10 seconds, guys? Second question would be 10 seconds, guys. Do you agree with that? Let's say if my operating cycle is 60 days. So if my operating cycle is 60 days, so the answer to the second will be 360 upon 60. So that will be just 6 cycles. Guys, I hope everyone is okay. So let's talk about one by one. Raw material inventory consumed during the year is 12 lakhs. Average stock of raw material is 1 lakh here. Interesting. So guys, how do we calculate each and every element? We're talking about a raw material consumption here. So that means if we are talking about R here, who will tell me what do we have in this case? If you're looking at R, what will be the number of days for raw material, guys? Who will tell me? So in terms of R, so we're talking about an average stock, let's say a 1 lakh in the numerator. And in the denominator, I said per day, raw material consumed. So 12 lakhs divided by 360. That is what we are looking at here. So what is the answer here? So some people are saying me 12 days. Yes, why 12? I think I'm getting 30 days. Can you double check, please? Vivek said 30 itself. So I think now some students are getting 30 actually. So you need to double check, guys. It's 12 or 30. I think some students, Memon says 30 days. So I think 30 days. That's okay. You guys can double check. Please let me know if there is a calculation issue here. Then we're talking about our WIP also as well, right? So we're looking at next one as a WIP. So in terms of WIP, what do we have? Average WIP, that is a 50,000. And then we have cost of production for the year. So 10 lakhs divided by 360, guys. So what's my WIP here? Or WIP holding period? What do you think, guys? Coming out to be 18 days, I guess. And then we are looking at finished goods as well. I think till now, everyone with me? 18 days. And what about finished goods, guys? So average finished goods inventory here. So numerator is 80,000. And in the denominator, we are looking at 16 lakhs divided by 360. So what do we have here? Are we getting another 18 days here? Are we getting another 18 days? So that means no worries, Sushil. I'm sure you will catch up. Okay. Madhushri, can you just please double check the calculation? I'm not sure. 1.5 is the answer for what? Okay. Now we have RWF, and I think the debtors collection period is already given to us. D is 45 days, and the credit period availed So this is the creditor's time. So let's say C is my 30 here. So my operating cycle would be a 30 plus 18 plus 45 minus 30. So are we looking at 81 days, guys? Are we looking at 81 days here of operating cycle? And that means the number of operating cycles would be a 360 upon 81, that is a 4.44. Can you guys please confirm? I think some of you are getting some calculation, I think minor calculation deviations, because I could see most of the students are giving me correct answers. Surbhi, Srushti, Pooja. I think someone said 16 days. I think Srushti just checked 16 days. I'm not sure 16 days for which cycle. So yeah, 81 days. Yeah, finally I got Madhushri, Surbhi, Vrinda, Sandeep, everyone replying as a 81. Charu as well. So guys, number of days, number of operating cycles in a year, 4.4. I think now you got it that more number of operating cycles, better it is. Right? More number of operating cycles, better it is. Okay, so you can quickly have a look on the solutioning. And as we did in the investment decisions, guys, and probably I can see that most of you had downloaded the presentation or the notes, and after the second session, that is on the Thursday evening or by Friday, actually, I will be uploading the solutions for the questions in this particular file. So don't worry, till that time, I want you guys to work upon independently, and then I will be uploading another file on Friday. Okay, so let's move on. Now we move on to the second step of discussion. Now this is it. This is this is actually the cream of it, right? This is why we are all here, to understand, to calculate working capital. Am I correct? This is why we are here. So in terms of the working capital components, we all know current assets minus current liabilities, right? So Mansha has a point. Can we calculate based on the denominator on the base of monthly? So Mansha, again, if you're talking about monthly, you need to understand from a perspective of per day. So that means you are looking at first you need to compute that on a monthly basis as well. Then you are taking about 30. So you're not dividing that by 360, then by 30. I don't have an issue over there. So if you're looking at a raw material inventory consumed during the year, so you have to change both divide by 12. So it's one and the same thing. Okay. So both will be same. Okay. So okay, so we move on to the requirements of our working capital now. So raw material. So we have in terms of current assets. Let's first of all let's understand that that we are having some components of our current assets. Major components we're talking about inventory. Within inventory, we have three types of inventories for a manufacturer: raw material, work in progress, and finished goods. So let's talk about these one by one. So how much raw materials do you need? Now these are again some set of formulas, and I'm actually not sure whether you need to remember or memorize these formulas by heart. You will not require. Again, I will tell you in the question. And we'll be doing some practice. I will tell you, you may not be requiring to remember all these formulas by heart. Just be familiar. Try to understand the logic and rationale basically. So what we are doing here is, look at this. I'm trying to explain you this formula here. Estimated production in the units, we are dividing it by 365 days. Guys, what we are getting here? What we are getting here? Estimated production in units. That means how many units of raw material do I need per day? Right? Per day. I'm multiplying that by the cost per unit. So I'm talking about, per day cost of raw material needed. And that I multiply with the average raw material usage. So basically I'm getting how much raw material I need. can we say that, okay, if we are given the cost, okay, let's look at alternatively. If we are given the cost of the raw materials consumed, if I'm getting a cost of the raw materials consumed, and and the organization policy that I need 1 month of the raw material, I can probably straight away divide that by 12. Guys, I just want a quick confirmation on that thought process. One way, I have explained you to understand the formula. Alternatively, I'm giving you a scenario that, okay, let me give you a cost of the raw material consumed throughout the year, and I give you that, okay, hey, the organization policy is to keep a 1 month of raw material. I can straight away divide by 12, and that's my raw material inventory. Get the same number, right? And similarly for all other formulas. So look at WIP, estimated production, divide by 365 days. So daily production, we multiply that by the cost, we get a daily production cost, and we multiply that by the average WIP holding period. So I can again say that, okay, cost of production straight away, and that divided by whatever number of period the organization policy is. So I think if they are, most of the questions they will be giving you the organization policy for holding the raw material, WIP, and even finished goods, and that will be used directly. I'm telling you. Okay, finished goods, again the similar formula. So what's going to change here is it's actually nothing. It's about the cost of production, WIP, and cost of raw material. In this case, this comes from purchases. WIP cost comes from production here, rather whatever is the in process, and again this is also cost of production. Now, I hope inventory is clear to everyone. So in the component of current assets, we are looking at inventory. Within inventory, we are looking at raw material, WIP, and finished goods. I am telling you in advance, more or less, you will not be even requiring to apply these formulas as this. We'll see how we do it in the questions. Okay. Now, I want to talk about very importantly with respect to the debtors here, receivables. Very important. The most important aspect for me is the debtors. Why so? Now, my point is, let me ask a question here on the top. On 1st of March, I made a credit sales for rupees 1 lakh with a payment term of 40 days. That means probably in my working capital, I would be having a 1 lakh as receivables, guys. But my question is, in an accounting term, now please listen to me. In an accounting term, we might see receivables as 1 lakh. That's okay. We might have receivables of 1 lakh. But my question to all of you, if I'm saying my debtors is 1 lakh, does that equal to the fact that my working capital requirement is 1 lakh, guys? Yes or no? With respect to receivables, I know there are other elements also, inventory, cash, bank, but my working capital requirement with respect to the debtors is 1 lakh. Does that mean that or no? What do you think? If I'm making a sales of 1 lakh, credit sales 1 lakh, does that mean that 1 lakh is my working capital requirement? I need an answer with reason, by the way. Let's see how many of you are able to explain that. So I got two answers. Vasu said no, Charu said yes. So it's a tiebreaker right now. Let me wait for more responses then. So let's see other responses. Probably if you could give me your reasons also, that would be great, guys. Okay, Rohan also said yes. Okay, now I'm getting mixed responses. Meman says yes. Vasu says no. Vasu has a very interesting reason. Vasu says that we have already sold goods. We don't need anything with respect to that credit sales. Okay. Okay, Vasu, that okay. I think your answer could be okay, but I'm not sure of the reason though. Let me ask you this question very differently. Let me ask this question very differently here, and let me see if you can basically answer now. Let me reword my question actually. When I reword my question, for a debtor of 1 lakh, will working capital of 1 lakh be blocked? I'm asking the same question in different terminology because I want you to understand something. This is the most important factor, guys, in terms of working capital. Jamil said it would be more than 1 lakh. Jamil, I said with respect to working capital. I know there will be inventory, there will be cash in bank, there actual working capital will be more. We know. I am only talking about for debtors. Do you need 1 lakh? I'm getting 50-50 answer. Okay, let me break the ice. I think some of you are saying yes, some of you are saying no. Okay, so Rohan has a reply. We had sold the goods and need that much cash to reorder to sold the inventory. Okay. Mansha says no. Mansha has a perfect reply here. Mansha says in debtors there is a profit element, and in working capital we are only focusing on the cost of sales. Okay, that is an amazing answer, Mansha. And let me try to explain that to everyone. Vasu, let me try to explain. When you are like now, for a moment, don't think only from a perspective of an accountant, guys. As an accountant, I might feel that that your sales, you are talking about a sale of a 1 lakh, right? As an accountant, you're talking about of a sale of 1 lakh. That I okay, that debtors is 1 lakh for me. But my point is, would you have spent 1 lakh to make that product, guys? Or that is the selling price? You would have sold something for 1 lakh. Let's say the cost of this was 70,000. Now tell me, for receivables, do you need a 1 lakh of working capital or 70,000, guys? Now I'm getting all the replies. So amazing answer, guys. Now I think now absolutely Rakesh is coming up with that, or Jamil said with respect to a profit margin, and even Charu said that we sell the goods at profit. Amazing answer, guys. And then Prema and Saurabh as well. So this is what I'm talking about, guys. Now you are selling the goods for 1 lakh. You have a debtor of 1 lakh. That's okay. But from a working capital, from a management accountant perspective, think from a management accountant perspective, how much funds will be blocked? 70,000, because that's a cost. Now I can be a little bit more harsh on you by saying that 70,000 includes a 10,000 of depreciation. Now that could be further a cherry on the cake. Then suddenly everyone will be like, sir, now 70,000 will not be blocked, 60,000 will be blocked. So we have to be very careful, because depreciation will be on machinery. It's more of a non-cash expense that's already incurred in the beginning, right? So we will be seeing that, guys. So Vasu, Jamil, and Pooja, I think, do you agree with me with the additional information I just gave you that 70 will actually be 60 now? Because if 70 includes a depreciation as well, right? So the point is, we are focusing on, when it comes to debtors, look at the note at the right bottom here. The cash cost is considered, that is exact funds requirement, that is generally less than the current assets, guys. Reason is that you sell at profit, right? So cost will be less than the sales. So we are talking about cost of sales, and that too excluding the depreciation here. I hope everyone understood that now. Good. Now, so we have talked about inventory, We talk about debtors. Let's talk about other current assets. Okay, cash in bank. Now, let's also talk from a current liability perspective. Now, current liabilities, we have creditors. So we take that. We could be having some expenses outstanding. No, the expenses which are due, not which are standing outside, but which are due. So we are talking about some wages outstanding here. Let's say the company pays wages in 15 days time. So we're talking about 15 days of wages. So all these will be considered part of my calculation of current assets minus current liabilities. Let's move on. Let's try to understand how do we actually present our answer if there is a question with respect to a current current assets and current liabilities or calculation of working capital. What we'll be going to do is step by step we will be calculating the requirement of each of the component. So let's say we start with the current assets. We'll first attack on inventory. In inventory, we'll calculate, okay, how much raw material you need, how much WIP you need, how much finished goods you need. That gives you a total inventory. So we're talking about a total inventory here. Similarly, how much trade receivables you need, a minimum cash balance. So what the total of the current assets is nothing but a gross working capital. Now, for me, the most important point here is we need to understand that generally in the questions of calculation of the working capital, they give you an additional requirement. That is, you are talking about current assets minus current liabilities of working capital, but they need a safety margin. Whatever you calculate, current assets minus current liabilities, let's say the question tells you that they keep a 20% safety margin. So what you will do is you calculate current assets, you calculate current liabilities, you take the difference, add 20% margin of safety. That will be your actual net working capital, guys. Very important point. Pretty sure that I think everyone understands what's the safety margin is, right? Right now, I'm pretty much sure if you guys have to, wake up at 7 a.m., I'm pretty sure many of you would be keeping an alarm of a 6:45, the next alarm for a 6:50, another alarm for 6:55, and probably if need a fourth alarm as well. Am I correct, guys? I'm sure like we generally have the tendency, right? We keep a margin of safety in everything, right? So anyways, or you could say being conservative in approach. So the question will give you what amount of margin that they require, and that you need to be pretty careful. Now, I have put in a very important note at the bottom because that relates to a very interesting question in your study guide, guys. That is the questions involving a double shift. Questions involving double shift. And some of you might think that, okay, double shift, more work for us. Come on. No, don't worry. I'm keeping a note to kind of make things clearer and easier for you. When we are working in double shift, don't you think we are probably trying to bring in more efficiencies? Think about how the BPOs and all work. They work on a model of utilizing their seats. When they use a term called FTEs, full-time employees, so they want to use their seats. Let's say you have clients in a US, in a Europe, and let's say in Australia. So you may have a staff coming in from 6 a.m. or rather 5 a.m. to a 2 p.m. and a 2 p.m. to 11 p.m. and another staff coming at the night for the US guys. So when we are talking about a double shift, guys, we are talking about a more efficiency. We know that, okay, we need more working capital. That's okay. But my question is, will the double shift working capital be double the single shift working capital? Exactly double or no? I think we need to focus on that it will not be exactly double because we are talking about efficiencies here. So if I am thinking of a double shift, there is a very, very important aspect we need to always remember. And that relates to this factor, WIP. Guys, let's say there are two shifts here in my factory. First shift is, let's say, starts at 7 a.m. ends at 3 p.m. And another shift starts from 3:30 p.m. and that ends, let's say, on 11:30 p.m. So we're talking about two shifts here. How much time it is? Almost 8 hours, right? 8 hours each. Had I been operating on a single shift model, let's say right towards the end of the day, generally, I'm just giving an idea, generally 1000 units are in progress. Do you understand that if I'm operating in a double shift, now these guys who are coming in at 3:30 p.m., these will pick these units first, they will complete them, and probably I might still have WIP of 1000 units only at 11:30 if we assume the same level of efficiency between the two set of workers. So the WIP is not doubling up here. WIP of the first shift will actually become the WIP from the second shift, because those units would be completed, same 8 hours of work, and similar output would be there, guys. Guys, make sense? Everyone understood that? Okay, Survi says at the top, you're not able to see the number. I can just read it down and see what I'm trying to say is that, let's say I'm just reading out it. Let's say the 7 a.m. to 3 p.m. my WIP is 1000 units. And the people coming at 3:30 p.m., they're picking those, they're completing, they're making more units. But at 11:30 p.m., there might be another 1000 units, which will be in WIP. So that means with the double shift, my WIP requirement is not doubling up. My raw material requirement may double up. Because if I am doing a double shift because I want to double up the sales, I want to double up the production. So raw material requirement may double up, but WIP requirement will not be doubling up. Guys, this point clear to everyone, please? Absolutely perfect. Great, guys. So let's do one thing here. I think before we go on a question here, just to calculate the working capital, it's almost 7:18 p.m. So let's take a quick break here, guys. Let's try to come back in a 5 minutes, if that's fine with you guys. So let's take a quick short break. We have a lot to cover. So we'll take a 5 minutes break today, and we'll start in 5 minutes time, guys. So take a break, take your refreshments, and come back with full energy and full enthusiasm. See you in 5 minutes, guys. Welcome back, everyone. So I was looking at a couple of queries. In fact, the doubt relates to the same point. So let me go back to the previous slide. So Surbi wanted to ask about the WIP, right? Now, try to understand that. Let me take another example for you. Let's say in 8 hours, I'm able to make, uh, let's say, some units, which is, let's say, 500 complete units. And there are some number of units in progress. Let's say talk about 30 units which are in progress. Don't you think that logic will apply to every 8-hour shift? So the 8 hours are not enough to complete the entire number of units, right? So that means those of the workers who will be coming in the second shift will also be kind of first completing these units and working on other units, and they might not be able to complete some units. So the WIP will be at the end of the second shift. It will not be 30 into 2 as a 60. That's what I'm trying to say. Surbi, I hope that is clear now. Okay, great. So let's move on, guys. Let's try to now understand this working capital calculation with the help of this particular question here. Now, on 1st January, what's happening in this? The director, MD of Bhavani Limited, is curious to know the amount of working capital that will be required during the year. Compute the working capital requirements forecast based on the below information. So we are looking at production during the previous year was 1,20,000 units. It's planned that this level of activity would be maintained during the present year, and the raw materials are expected to remain stored for an average of 2 months before issue to the production. Expected ratios of the cost to selling are raw materials 60%, direct wages 10%, and overheads 20%. And they've given each unit is expected to be in process for 1 month, raw materials fed into the pipeline immediately, and the labor and overheads accruing evenly during the month. Finished goods will stay in the warehouse awaiting dispatch to customers for 3 months, and credit allowed by the creditors is 2 months here. For the debtors, it's 3 months, and we are given a selling price and also the other extent of the overhead and all, right? Now, my point here is what we need to understand, that company is also wanting to keep some cash of 40,000. So we'll take care of that in terms of the working capital requirements. But we need to understand that we are calculating working capital based on whatever information we have here. Now, having said that, should we start calculating one by one, guys? What do we have? So I think let's do a quick calculation. Do we target to first calculate what is happening in terms of inventory, guys? As I said, in terms of inventory, we are looking at raw materials, WIP, and finished goods. 3 things, right? So what is the information given to us for the raw material, guys? We are looking at a production of the previous year was 1,20,000, and it is planned that the level of activity would be maintained. And raw material are expected to be in store for an average of 2 months before issue to the production. Now, cost to the selling price is 60%. So can I say the raw material is 5 into 60%, guys? 3 per unit? Can I say 3 per unit is a raw material here? That's what we're doing. And 1,20,000 was a production. So that means for the entire year, and I need to keep a storage for 2 months. So how many units I'm looking for raw material, guys? How many units I'm looking for a raw material? It's pretty easy and straightforward here. That for raw material, I'm looking at a 2 by 12 into 1,20,000. So 20,000 units at a cost of 3. So that means my raw material cost would be 60,000 guys in the working capital inventory. So my inventory would comprise of a 60,000 rupees of raw material guys. Is everyone with me? Okay, can anyone tell me what would be a WIP requirement? What would be the WIP requirement? So we're talking about one by one, right? We're understanding that, okay, raw material is a 60,000, but who can tell me what would be my, WIP requirement? So raw material inventory is 60,000. That's great. But what about WIP? I'm just kind of giving 1 minute to everyone. And just to quickly tell me what is a WIP amount. What does the WIP consisting of here, guys? Material, labor, and overhead, I guess. Very, very important calculation for this WIP here. Rohan says, how did I calculate 3 per unit? Rohan, selling price is given to us 5 per unit, and they are given a cost to selling price raw material 60%. 5 into 60% is 3. But WIP may we need to be very, very careful here. WIP may we need to be very, very careful. We understand in WIP, work in progress, what goes into cost of production, guys? Raw material, labor, and overhead. Now, they have given us each unit is expected to be in process for 1 month. So raw material is going into the pipeline immediately. So if my unit is expected to be in process for 1 month, raw material goes immediately. That means on first day, guys. So that means in WIP, raw material for 1 month needs to be taken. 1 month here because it goes immediately into the pipeline. So that means 1 month requirement would be 10,000 units because my yearly requirement was 1,20,000 guys. So that means from a raw material perspective, 1,20,000 divided by 12 is 10,000 into 3. So we're looking at a raw material of a 30,000 here. Raw material of a 30,000. Rohan is giving me an answer for WIP. Great. Rohan says 45,000. Rohan, are you doubly sure? I'm not too much sure actually. There is a very interesting trick in this question. Let us read the next line carefully, guys. The next line says labor and overhead cost accrue evenly during the month. Guys, if we are talking about 1 month, 1 is there, 30 is here, and we have different days. Let's say this is entire calendar month, 1 to 30. Right? Do you agree with me? Evenly accrue throughout the month ka matlab, what is that? Every day you are incurring labor and overhead. We are incurring the labor and overhead every day, guys, evenly accruing throughout the month. Yes or no? Do you agree with that thought process? It accrues evenly throughout the month. If that is the case, when I'm saying that WIP takes 30 days, don't you think the labor and overhead component, we have some units for which first day the amount was incurred was 30 days. For some units, 29. And imagine the last day of the month, you have just 1 day of labor overhead because it is incurred every day, guys. Is it safe for us that can we say for labor and overhead accruing evenly throughout the month means we will be taking 15 days of labor and overhead, guys. Very important point here. Language of the question, guys. Labor and overhead costs accrue evenly during the month. So that means my direct wages and overhead, what was that? 10% and 20%, guys. 10% and 20%. That means a total of 30% is labor and overhead. So 30% of 5. So 30% of 5 is 1.5. And we are looking at 1,20,000 divided by 12, that is 1 month, and that is into half for 15 days. For 15 days, we are calculating. So that means we are looking at a labor and overhead of 7,500. So in nutshell, we are looking at a 37,500 of WIP. I hope everyone is okay. That was the trick. Evenly, that cost was incurred evenly throughout the month. Rohan, everyone okay with that now? Sandeep, absolutely good. What about others, guys? I just need a quick confirmation. Everyone okay with the WIP thing? Let me know if there any question here. The simple logic, you are incurring labor and overhead every day. So for some units, you have 1 day of labor and overhead. For some 2, some 3, some 4, some 30 days. So on an average, I've taken 15 days. Vasu, this is what I'm explaining. The last, so the whatever the in progress you have, the 30 days production you have in progress, which is not complete, on 30 days may you have labor and overhead incurred every day. If you take the entire 30 days, you are ignoring the fact that so some of the units had labor and overhead in the last 15 days. Some of the units and the labor and overhead had the expense incurred in the first 15 days. Think about that. Because if it is accruing evenly during the month, first 15 days maybe there is some amount incurred, last 15 days maybe. So we take average 15 days. I hope this is okay now. You guys are feeling better. Okay, so can anyone tell me finished goods, guys? What's happening in the finished goods? Finished goods will stay in the warehouse for 3 months. Wow. Finished goods, guys, 3 months. I think they should be simple, right? Finished goods should be simple. So what is the cost of production? Total cost of the production is 5 into 90%. 4.5 is the cost. And you are talking about 3 months of the units. Are we talking about 30,000 into 4.5, guys? 30,000 into 4.5? What is that? 1,35,000 if I'm not wrong. So what we are looking at here is a raw material of a 60,000, a finished goods of a 1,35,000. This is nothing but 5 into 90% is the total cost, 4.5, and that is for 3 months. So 1,35,000. Meman, I just explain that 15 days because the amount was incurred evenly during the month. This is because of this. When we say incurred evenly throughout the month, some expenses were incurred on the first day, some were second day. Every day there were some labor and overhead. First, second, third, fourth, fifth, sixth. Do the counting from 1 to 30. So if I'm looking on the 30th day, today there were some units in progress on which the labor or overhead was incurred yesterday itself. So I can't take 30 days on all units. I can't take 28 days on all units. I have to take an average of 15 days. Okay, because these accrue evenly, that is why we are doing a 0.5 months. So 7,500. So what's that? So total WIP is 37,500 days. Everyone with me on this, guys? Now, the debtors, for the debtors we were given for 3 months. So for the debtors we were given 3 months. Again, the same logic. We are talking about cost of sales. In this case, we have not been given any information about the depreciation. So let's only take cost of sales. Otherwise, if the depreciation is given, we'll be using cash cost of sales. So 90% is nothing but my, again, 4.5, right? So 6 lakhs into 90%, or we could use a straight away of 4.5 as well. 4.5 into 120. So 6 lakhs into 90%. So we're talking about 540 for basically a quarter. So we are looking at a debtors of 1,35,000, and creditors in the question given was last line, second last line rather. This is the one. The credit available by the creditors is 2 months. 2 months, right? So 2 months of creditors here. So that means if I'm using, so mind you, in the creditors, please be careful. In the creditors, we are talking about only material cost. I hope everyone okay on that. So we are looking at a 30%. So other way to look at the creditors is 1,20,000 into, what do we call, as per the 30%, or what was that amount? Raw material cost, 60%, right? So how would you calculate that? So we're looking at 3,60,000 probably. That into 2 by 12. So we are looking at 60,000. So this is another way, instead of 6 lakhs into 60%. So we'll get the same amount. So 1,20,000 into 360 into 2 months. Similarly, wages and overhead, that is given in the question as well, where we're talking about, on the perspective of 1 month, we are looking at 15,000 as well, because they had told us that overhead payable is actually in terms of 1 month over there. Now, okay, that is point which is given in the last line actually. Wages and overhead are paid on the first of the each month for the previous month. So that means we are looking at 1 month in arrears. So we have a labor and overhead of 5 into 30%, that is 1.5. So another way to calculate labor and overhead would be nothing but your 1.5 into 1,20,000, that driven by 1 by 12. So we are talking about 15,000 on that note as well. And then the cash in bank was given to us for 40,000 merely. So at the end, what we need to do is we to add up all the current assets. So my current assets are, what is the amount of inventory, guys? 60,000 plus 1,35,000 plus 37,500. So my inventory is anyways calculated at 195 plus 37,500. That means 2,32,500 is my inventory here. And debtors is my 1,35,000. And then you are talking about cash in bank. Was given to us as 40. So what is my gross working capital, guys? What is my gross working capital here? We can add these up. Inventory plus debtors plus cash in bank. $407,500. And when we reduce my current liabilities, which includes the creditors of 60,000 and payables of 15, so we are looking at a 75,000 of a current liabilities, and we are getting a 3,32,500. Charu says, why we are using 6 lakhs? Charu, I already told you alternative way. We could have used 1,20,000 into the respective amount. 6 lakh is nothing but 1,20,000 into 5. The entire amount, entire sales price. Because the ratios are expect cost to sales price. So we are using the entire 6 lakhs, or alternatively, I have also told you we could have used 1,20,000 multiplied by the respective cost element per unit. It's one and the same thing. Any doubts, guys, on this one? Or this question is clear to all of you? Okay. Vasu has a question. If we are adding material cost and raw material, WIP and finished goods, then wouldn't it be a double counting? Very interesting point. Vasu, first of all, a very, very good question. Vasu is saying we are adding the raw material cost in the raw material itself, in the WIP itself, and also in finished goods. Vasu, let's forget the solution right now. Let's come back to the question and a practical life. Think over of a manufacturing company. Is the production one-time job? Is a recurring job? Is production one-time project or a recurring project? Let's say tomorrow you open up a factory, you would want daily activities. It will be like churning, operating cycle we discussed today. That means at every point of time, there will be raw material requirement, there will be production happening, there will be finished goods. So those are three different stages. Got it? So Vasu, there is no double counting. Finished goods is a different stage once the production is complete, because you will be taking some days to sell. Look at the information given to us. Finished goods will be there. These are all different units. What I'm trying to say, raw material is at the time of procurement, purchases. WIP is production in progress, and finished goods is once the units are complete, ready to be sold. You need 3 months storage time. Okay. Surbi has a question from where we took 90% in case of finished goods. Surbi, we are talking about cost. That is okay. So cost is 60% material, 10% labor, and 20% overhead. 60 plus 10 plus 20, 90%. Making sense? Any other question, guys? Okay, great. Madhushri, Pooja, Vasu, absolutely. Thanks for confirming, guys. I hope the question is clear. I think this is just a basic question. The only important point I would say in this question was that evenly accruing of labor and overhead. And I hope you guys agree with that, right? Other than that, it was pretty straightforward. But now in this question, we did not have any information on the safety margin. So be careful. Okay, let's now quickly look at a quick check on one more question here. And in this particular question, we can see at the bottom, you have a big smiley here, right? Ignore work in progress. I think many of you are pretty much disturbed, or rather not disturbed, but it is scared of working capital, right? So they say that ignore work in progress. Just relax. Okay, so they have given some information. Sales at 2 months credit, materials consumed, suppliers extended 2 months credit, wages paid in 1 month arrear, cash manufacturing expenses, administrative expenses paid 1 month in arrear, and sales promotion expenses paid quarterly in advance. So company sells its products on gross profit of 25%. Depreciation is considered as a part of cost of production. It keeps 1 month of stock of raw materials and finished goods. So that's an important piece of information for us. And a cash balance of 50,000. But look at that. They said that, okay, 20% margin of safety, and we are looking at, ignoring the WIP. Sandeep wanted to understand, explain wages and overhead once again. Sandeep, what do you mean by evenly accruing? Every day there is a labor and overhead incurred, right? In the last question, every day you just have a look at the top where I have drawn a number line, where I showed you that, okay, every day there is a labor and overhead incurred. So if I have a 30 days WIP, so 30 days WIP means there are various units which has been started but not yet complete. Some of the units are 29 days old. Some of the units are just 2 days old. So every day there might be labor and overhead incurred on these units. So we don't know, should we take 30 days, 29 days, 27 days, 19 days, 12 days, 2 days, 3 days. When we are saying that evenly accruing, why should we worry? That means equivalent work was done in the first 15 days, equivalent work was done in the next 15 days. We took an average midpoint, 15 days. I hope this is clear now. Okay, let's focus on now the next question, guys. I am waiting for you. You guys need to tell me the number for a raw material here. We are talking about a working capital requirement in a new question altogether, and we are targeting inventory first. Let's do a quick calculation. So we're talking about current assets, and in current assets, we will be saying what is the level of inventory do we need. Who will tell me the raw material number, guys? Who will tell me the raw material number? Okay. Mansha, you have a very, very long comment. In the meantime, guys, I'm just reading Mansha's comment. I want you guys to give me the calculation for the raw material piece. So you're talking about liquidity. Conservative approach means focus to have a lower operating cycle. I would put it that way. I would say that, Mansha, that you're not targeting a lower operating cycle. Probably that would be a resulting impact. You want to have more working capital. That's it. That's a conservative. And as a result, you might not have equivalent expected of an operating cycle. That would be a result actually, not a focus. And profitability or aggressive approach that we want new entrant interested to gain the market share. I think that these are just examples of what you are using here. Because if see again if I'm having an aggressive approach, what about if I have process efficiencies? What about I have a lot of process efficiency? I'm actually operating at peak. I might be able to doing pretty good even being having an aggressive working capital. That's not necessarily that I'm only a new entrant over there. I think I would not be generalizing only to this what you have said. I'm not saying that you are correct, you're incorrect, but the statement you just mentioned is more of I would say a specific scenario. If you are a new entrant, what will you do? What about if you are an expert of your domain? Then also you might be, it's a management decision at the end of the day. So I would say that, we'll keep it flexible just to cut it short. Okay, in the meantime, I'm seeing the responses. So I'm getting two types of responses. There's 75,000 and 37,500. Guys, what is the raw material consumed here? Raw material consumed was 4,50,000, isn't it? And you need a 1 month stock. So 4,50,000 divided by 12. I think it should be 37,500 if I'm not wrong. 37,500, I guess. So we are having a raw material of a 37,500. So let me write down this a little at a lower level because I think some of you can't see on the top right. So we are looking at inventory in that raw material, which is a 37,500. How did we calculate this? 450,000 into 1 by 12. Okay, what about finished goods? Do we have finished goods here? Because very kind of the question they're talking about, okay, we can ignore WIP. What about finished goods? Okay, for finished goods, we need to do something, I guess. We need to calculate the cost of production if I'm not wrong. What do you think, guys? Again, the question says that we are looking at different aspects that, okay, for raw material and for finished goods, we need a 1 month stock. But what is a finished goods cost of production? Because we will have a material, we will have a labor, and we will have a manufacturing expenses also. So what is the total, guys? So my total cost of production would be material plus labor plus overhead, guys. 810 plus 480. That means I'm talking about 12,90,000. And we are talking about 1 month stock of finished goods. So probably a finished good would be a 12.9 divided by 12. What is that amount, guys? 12,90,000 divided by 12 here. So we're looking at a 107,500. So finished goods 107,500. Now, what's the next one then? We're talking about debtors. So we have a raw material finished goods. Let's talk about debtors, guys. Suppliers credit paid we will be getting is not the raw material inventory then. We'll be getting the accounts payable. We'll be using that current liabilities, right? 2 months credit is what we are, probably getting from the creditors. Okay, I got some different responses for raw material in between, guys. I hope everyone is okay now. Prema, Madhushri, and I think I got a different response from Hina as well. I guess you guys are okay. Raw material was 37,500. And Madhushri as Sandeep have given me answer for finished goods also. That's amazing. 107,500. But what about debtors, guys? What about debtors? What about debtors here? Who will tell me debtors? A very, very important aspect with respect to debtors. Charu, I have actually rewritten the top right section. I'm not writing that anymore. I'm writing in the middle section now. Okay. So anyways, I need to do some calculation with respect to the debtors. Guys, as I said, the debtors, we generally use a cost of sales. Can anyone tell me what is cost of sales here? What is cost of sales? I think a lot of students are giving me answers. Hina said 2,25,000. Khushi and Mansha says 2,45,000. Interesting. Very interesting. I'm liking it. I am liking it. What all we should include in cost of sales? We need to understand that. I think, can we say we already have a production cost of 12,90,000? We also have administrative expenses, 1,20,000. And we also have a selling expenses of 60,000. So guys, what is the total cost of sales then? That means total cost of sales. We are not adding the profit here, right? We're not adding the profit. And they have not given a depreciation separately, so we can't exclude that out anyways. So a 14,70,000 is what I'm getting as cost of sales. And if that is the case, we need to understand that sales were made at 2 months credit, guys. So can we say that 14,70,000? If someone get Rohan said 14,40,000. Can we just double check the calculation? It's 1440 or 1470, please. I think 1470 looks good to me. So into 2 by 12. So we're looking at a 14,70,000 for 2 months. We're getting 2,45,000, guys. So debtors are 2,45,000. Anything else do we have for the current assets? We have cash balance of 50,000. Do you see anything else, guys? For current assets, please. Sandeep, are you clear? It is actually 245. Please don't multiply or 2 by 12 by 18 lakhs because that includes profit also. That includes profit also. Yeah. Working capital, or we can say current assets, is how much? How much is the total gross working capital, guys? 4,55,000. But I think the work is only half done right now. Work is only half done. You need to calculate quickly the current liabilities as well. So current liabilities. What do we have? I think we have, first of all, we have purchases, if I'm not wrong. So creditors. So let's talk about creditors, guys. 2 months credit. Someone was telling me that why don't we use the 2 months credit? So I think now is the time. Now is the time, guys. So 4,50,000 is your total consumption. 2 months credit. So 4,50,000 into 2 by 12. That means we are looking at a how much amount? What will be the amount here? 75, I guess. 75,000. And then apart from this, there are some other arrears also. So wages, manufacturing expenses, administrative expenses, all of these are in 1 month arrear. So outstanding expenses. So we have a 960 into 1 by 12. Are we having a total of 80,000 here or what? So looking at 80,000 of outstanding expenses. So guys, what is my current liabilities? 1,55,000. And that means we are looking at a current assets minus current liability as a 3 lakhs here. But hold on. Is this the answer, guys? Is this the answer? I'm not sure, because they are telling us that we need to have a 20% margin safety. So 20% will add 60,000. Everyone with me on this? I think much better. So those of you have, or rather doing calculations, probably can look at the key to the solution here. And I think we did the same, right? So we have a 3,60,000 here. Okay, I hope we are all on the same page and we are doing great. We are understanding. Any doubts, let me know. I think we did the 2 good questions here. Now, this particular question, which is talking about a very, very interesting question from your study material itself, from a submarine enterprises perspective. Now, this question is talking about based on the shift here, right? So they're talking about a different situation. In this case, we are looking at a double shift probably. So I will kind of walk through this illustration with you guys. And in your study material, there is an alternative, I would say another interpretation of a double shift, which I will be giving you as a homework. But let us walk through what this question is talking about. So Submarine Enterprises has been operating its manufacturing facilities till 31st March 2017 on a single shift, working with the following cost structure. The given cost of materials here, 6 per unit, wages out of which 40% is fixed. So guys, what will be the variable wages here? Madhushri was asking me how much was the outstanding expenses. Madhushri, I'm talking about the previous question because there were three expenses. Three expenses. We have to add them up, and all of them were one month earlier. So 9,60,000 divided by 12. That's how we got 80,000. Okay, so let's focus on this question, guys. Now, so looking at a scenario where some marine enterprise is having a single shift structure. Now in this case, we're having a cost of materials. Wages is 40% fixed. So that means variable is 3 and fixed is 2. Overheads, again, a variable is 1 and a fixed is 4. Right? So we're given profit and selling price of 18. Sales during 16-17 was rupees 4,32,000. And at 31st March, the company is holding something like stock of raw materials, work in progress. How nice of them, right? We know these already: 36, 22, 72, 1,08,000. What has happened is, with God's grace, the market demand of their product increased. Now, what they are proposing is to double the production by working the double shift. So they want to double the production. The demand is increased. Now, guys, I hope you understand, with the operational efficiencies, you get some synergies out of it, some benefits out of it. Right? I'm sure even if you go for a shopping and you ask the shopkeeper that, please, give us some discount or whatever. And let's say if you're buying some, consumables, or they might ask, how much do you need? Even if you talk about daily fruit or vegetable shopping, right? You buy apples, you said how many kgs you want, right? So when you kind of work more, when you buy more, you get some benefits, right? So here, in this case, we're talking about a 10% discount will be available from suppliers of raw materials in the view of increased volume of business. Selling price remains the same. Very good. So my discount, so that means if I'm looking at from a supplier's perspective, do you agree that the revised cost would be a 5.4? 6 minus 10%, guys. Selling price remains the same. So what is my selling price? 18. Credit period allowed to the customers will remain unaltered. Credit availed of suppliers will continue to remain same at the present level. So my present level is nothing but a 2 months. Lag in payment of wages and wages and expenses will also be a half a month here. That is interesting, but can anyone tell me they are saying the credit period allowed to customers will remain unaltered. Can anyone tell me what is the present credit period allowed to the customers? Can anyone tell me what is the present credit period allowed to the customers in this case? Just waiting for your response for this one, guys. Okay. Surbi says 2 months. I am saying customer Surbi. Not suppliers. Okay, let me see if anyone else can identify. Look at that. Some of you are saying 2 months, some of you are saying 3 months, some of you are saying 1.5 months. Okay, I think let's do a ice-breaking question here. I think there is some confusion here, right? 3 months, 2 months, 1.5 months. Okay, let me ask a different question, guys, here. Guys, how many months in a calendar year have 28 days? How many months in a calendar year have 28 days? Nothing related to the working capital. Just a quick check. How many months in a year have 28 days? Light question, right? Nothing to do with the technicalities. Let's see what do we respond. Look at that. Rohan says 1 month. Rohan, which month? What about January, March, July? Doesn't they have at least 28 days? Madhushi also says 1 month. I think all the months have 28 days, right? The fact is, like, some have more. Am I correct? Some have more. All the months have 28 days. So Kushi, every month have 28 days, right? Anyways, great. So I was just checking that everyone want to feel light here. Now coming back to this question, guys. So let's talk about this one, guys. What was the sales during the year 16-17? 4,32,000 given to us right here. What is the sundry debtors? 1,08,000. So let's divide 4,32,000 divided by 12. I think you will get 36,000. So 36,000 is a monthly sales. 36,000 is a monthly sales here. So that means if I divide 1,08,000 divided by 36,000, that means I'm getting a 3-month status here. I'm getting a 3 months here, right? So that means it's not 2, it's not 1.5, it's 3 months. Okay. Everyone with me on this? 3 months? Okay. So what we have to prepare is additional working capital requirements if the policy is to increase the output is implemented here. Now, there are two things, guys. There are two things. The question is, if I just look at the call of the question is that if the policy to increase the output is implemented, we have increased demand. As a policy, what was my policy, guys? To propose the double the production as another shift, right? So that means we need to understand that, let's say the market demand was increased. There were two possibilities. How many units were there, guys? Okay, let me ask that also. How many units were there in 2016-17? How many units? I think 4,32,000 divided by 18. 4,32,000 divided by 18 is a 24,000 units. So there could be two ways of looking at it. Let's say I'm working in one more shift. So I'm looking at a 24,000 in one shift and 24,000 in the other shift. We are looking at a 48,000 units right now. But don't you think that there could be also a possibility, alternatively, I start making 48,000 permanently from the next period, probably another period, or let's say I'm taking a 48,000 altogether. So the alternative approach is mentioned in, there is another way. If you look at your study material for this class discussion only, we'll be just focusing on another shift. So I'm telling you in advance, the other part, the second part or an alternative solution, which is not the requirement of the question, just a suggestive approach. You guys can read it later on. Right now, we'll be focusing on another shift, 24,000 in one shift, 24,000 in another shift. But before we go to the additional working capital requirements, mind you, they're saying that additional working capital requirements here, we need to understand first what is the revised cost structure. Because I think there are too many changes for our liking. Because remember, one more thing, that although we know that selling price is unchanged, material price is going down, but I think, do you think cost per unit for some elements will change? Cost per unit for some elements will change, guys. What about the fixed cost? The wages, fixed overheads. So let's say 24,000 units and you have a fixed overhead of 80%, that is 4 per unit. So 96,000 overhead should be fixed. So let's talk about this. A very important aspect. We know that sales for the 2016-17 was 432. Everyone gave me this answer, 24,000 units for a single shift. That was amazing. We also talk about in the given information, we had that, okay, my closing stock here valued at total cost was a 72,000. 72,000. Raw material 36,000. So raw material key cost is 6. So 36,000 divided by 6 is a 6,000 units for a single shift. Raw material 6,000 units. Closing work in progress. Again, we are talking about 22,000, which is given to us valued at prime cost. So what is in terms of units? Now that is important here for us. Prime cost, we all know. What is prime cost, guys? Labor and material. So 6 plus 5 is 11. In terms of raw material, we were talking about 36,000 divided by 6. So let's say what are the number of units here? This is 6,000. The work in progress are 2,000. And finished goods are the total cost is a 16. 18 minus 2. Total cost is 16. So what are the number of units in the finished goods, guys? We are looking at a 4,500 if I'm not wrong. These are the units. Everyone with me on this, guys? So number of units in the single shift. Why we are calculating this in advance is because if there is a double shift, guys, do you agree? If there is a double shift, all of them will go double. Stock of raw materials, WIP and finished goods. Let me see if you can answer that. If I am moving to double shift, would I need all of these as a double? Double the stock of raw material, double the WIP and double the finished goods? Let me see if you can answer this. If you answer this, that will be amazing, guys. That will be a return gift for me. If you guys can answer this. In double shift, the units of all the 3 types of inventory, are we saying all the 3 will be going to double or not? Sandeep says no, sir. So guys, if your answer is no, what is the exception? Okay, everyone now coming to form. Charu, Saurabh. Everyone says, okay, it's a WIP is an exception, guys. Amazing, guys. If you remember that, that's amazing. I told you specifically few slides back that if you're talking about that double shift, my WIP might still remain at the same level. Absolutely wonderful, guys. Absolutely amazing. So we need to understand that what I have mentioned in the red font here, that it should not be changing with the double shift as even at the end of the second shift, we'll have the same number of units, guys. Amazing. Okay. Madhushri also is indicating about the efficiency. We will see that as well. So let's talk about the cost, guys. Now, the very, very important table for the cost. Now, the current level, the present level is the 24,000 level here. What we have done is the raw material is 6. That's okay. The raw material has gone from 6 to 5.4, but the wages have been segregated into variable and fixed. Guys, will the fixed cost change with the level of production? Unless there is a capacity constraint, that's a different thing, which is not mentioned to us. We are working in double shift because we have a capacity probably, and they have not given any increase in the fixed cost. So what we'll do is we are keeping this 48,000 of wages constant even for double shift. As a result, the cost per unit goes down. As a result, the fixed wages, which was 2 per unit, is now 1 per unit, guys. The variable wages, the variable labor doesn't change. 3 per unit, but fixed per unit goes down. Simple logic. As the volume goes up, the fixed cost per unit will always come down because my total fixed cost remains constant, guys. My total fixed cost remains constant. That's the logic. Okay, similarly with the overheads, guys. So overheads we had 4 as fixed. So 4 into 24,000 is 96. 96 remains 96. That means per unit from 4 it is down to 2 now. So total doesn't change for the fixed cost, guys. Per unit has to come down. Okay. Now that means the total cost per unit, if we were making 24,000 units, was a 16 per unit, has come down to 12.4. And as a result, we are kind of having more profit. Can I say that we are seeing a classic example of economies of scale, guys? Can we say that we are seeing a classic example of economies of scale here? We are getting benefit out of the larger production, larger volumes here. Make sense to everyone? Now that means we have everything what we needed. We have everything what we needed. We have the revised cost structure. We have the requirements of raw material, WIP, finished goods. The suppliers period is given to us, 2 months. And also in terms of a perspective, the debtors also, right? So credit period allowed to customers will remain unaltered. I think this was also very interesting thing, guys, that we are looking at a stock of raw material from a perspective of 2 months, right? And that probably rather 6,000 units in terms of units, that probably will double. We'll see that. But in terms of the creditors, we are looking at a 2 months level. So we'll see that when we calculate the accounts payable. Okay, so let's attack this question in terms of calculation of our working capital. Okay, so what is happening in terms of a working capital here? Now let us first focus on only the single shift. Only single shift. We were given some things in the question itself. So on the right hand side, they're already telling you the stock of raw material, WIP, finished goods, and the sundry debtors. That was anyways given to us, guys. So just taking as it is, 36, 22, 72, and a 108. The only thing is there is a change in one aspect. Can you identify which and why? Which and why? The sundry debtors, as per the balance sheet, as per the accounting, is 1,08,000. But mind you, this is at selling price. This includes profit. We have to eliminate the profit, guys. We have to eliminate the profit. So that means to eliminate the profit, what we are doing is 1,08,000 divided by 18. We multiply it by 16 because my existing cost is 16, not 18, guys. 18 is the selling price. This debtors is basically talking about your overall debtors, but my cost which is blocked in debtors, cost of sales is not 1,08,000. Cost of sales will be 96. Guys, I hope everyone with me. So we took 36, we took 22, we took 72, but what changed was the most importantly the debtors based on the cost of sales, guys. I hope everyone with me on this. Now, the only thing we needed to calculate was that we needed to understand the liabilities portion. So in terms of liabilities, guys, as I said, there was a term period of 2 months and wages and expenses have a half a month. So if I need to understand, that, okay, hey, for the creditors, so just give me a second. Let me just change the color of the pen and make it to red here. For the creditors, what will be the number of units? 24,000 divided by, or rather we can say multiply by 2 by 12 or divided by 6, which is giving me a 4,000. Similarly, for expenses, we are saying 24,000. Either we divide it by 24 or I multiplied by 0.5 by 12, it will be giving me 1,000. I want everyone to understand this, that my creditors in terms of units is 4,000 because 25, and we are just looking at the single shift right now. So 24,000 divided by 6, or you could have done multiplied by 2 by 12 would have given you 4,000. And that's where these numbers are coming from. So that we multiplied by 6 for the material and wages and expenses. Please make sure we are using the total amount of wages. We are using the total amount of the expenses. We are not segregating fixed and variable here. Don't do that mistake. So we get a current liability of 34,000. So 226 minus 34 giving me a working capital of 1,92,000. Guys, can you confirm the existing working capital is clear to everyone, please? We are not even looking at double shift. We will be looking at double shift after a minute. Everyone okay, guys? So we are looking at a scenario of a 1,92,000 in case of an existing single shift scenario. But what I need you to understand, okay, Surbi says, please repeat current liabilities. Okay, I can give you an alternative to this actually. You know what we are discussing here. Let's try to understand current liabilities. Now, Surbi, we need to understand what would have been my total purchases. 6 into 24,000. 1,44,000. That's what we are doing here, right? And we have 2 months period, 2 by 12, we'll get a 24,000. You could do that way also. 6 into 24,000 would be my total purchases. That into 2 by 12. Similarly for expenses, I could use 5 plus 5 as a 10 here. So 10 into 24,000 is 2,40,000 into 0.5 upon 12. So probably a 10,000 over there, I guess. So that is why it is a total of 34. Jamil, I think I just explained another way of calculating the creditors. Is that okay now? And Surbi, I hope you are also clear. So existing working capital, everyone is on the same page of 1,92,000. Now, moving on to the double shift. Guys, in the double shift, we have to be very careful. We are using different rates now, which we calculated as economies of scale. Raw material, discounted amount, WIP. WIP changed. WIP significantly changed, guys. WIP is no longer 11 now. Earlier it was 11. How WIP was 11? We're talking about in terms of calculation of our scenario per unit. So let me show you. We are looking at a rate of our WIP as 11 here because we are talking about a prime cost. WIP was valued at prime cost that is given to us in the question itself. So prime cost was 6 plus 5. But now the prime cost changes. So prime cost changes. What will be the prime cost now? New prime cost. So prime cost is a 5.4 plus 3 plus 1, if I'm not wrong. So we are looking at a 9.4 as a new prime cost instead of 11, guys. And that's what we have done here. New prime cost, 9.4, guys. And not to your surprises, the work in progress is constant at 2,000 units. And I think you guys agreed to that. You guys agreed to it that in double shift, the work in progress will not change. However, raw material changes. Look at raw material, guys. 6,000 into 2. Because you are talking about double the production, you need double the raw material, right? You need the double the raw material. So 12,000 into 5.4 is the 64,800 is my raw material here. 2,000 into 9.4 is WIP. I hope everyone okay with the WIP. It's prime cost. Finished goods. Now that is very easy for us. We had a 4,500, double the production, 9,000, and the cost which was calculated by us is 12.4 right at the bottom here. 12.4 was the total cost, and we are talking about a finished goods. So we take the finished goods at 12.4, even the debtors at 12.4. But for finished goods, our requirement in terms of units gets changed. 4,500 into 2, 9,000, because we have more demand, so we need more stock. So my raw material is 64,800, my work in progress is 18,800, and my finished goods is 9,000 into 12.4, giving us 1,11,600, guys. Charu, okay, great. I thought you were asking me, but I think you got it. Great. Okay, so everyone okay with inventories, guys? Just give me 5 more minutes, guys. We'll wrap it up after this example. Guys, everyone okay with the inventory part? Can you please confirm yes or no? If everyone with me on the inventory for the double shift, please just confirm on the Q&A. Any doubts? Let me know. More than welcome. We are moving to thanks, Sandeep. We are moving to our debtors now. Guys, debtors will also change. Debtors will also change. Earlier it was 6,000 units. We calculated that. 6,000 units in terms of the requirements. How do we get that, guys? Any thoughts? How do we say that debtors were for 6,000 units? Because 1,08,000 divided by 18, simple. 1,08,000 divided by 18 here. So debtors were for 6,000 units. But now, since it's a double shift, we are moving on to 12,000 units, guys. We are talking about 12,000 units at the cost of sales, 12.4, which is giving us a 1,48,800 as a debtors amount for the double shift. So what we did was we calculated the present single shift number of debtors units. For how many units were the sales for the debtors? It was 6,000. Since the demand is more, since we are increasing the production for the more sales, my debtors are with respect to double the units now. 6,000 into 2, 12,000 units, and 12,000 into 12.4 is 1,48,800, giving us a gross working capital here for 3,44,000. Just double check. I'm not sure. I think we don't have any other information with respect to cash or bank here, right? Okay, whether we have to consider it on units of 48 or only on double shift. Prema is an interesting question. Prema, the 48,000 units is the outcome of double shift only, right? Is outcome of double shift only. Double shift is nothing but 48,000. So we are majorly using that also in nutshell, right? So you could, I think if you're asking me in that ways, probably you could have look at in a perspective, in a different perspective also, that hey, you are getting how many months of units of sales. So we're saying that okay, 24,000. The debtors are for 6,000. Okay, so we are looking at almost like 4,000 of units which were sold. 4 months of units were sold, but that's okay. I think it's better to use the number of units in this case because per unit cost has gone down. Okay, I hope everyone okay, guys, because the per unit cost have gone down. So that's why we are multiplying everything with the unit in this case. Okay, let's move on to the current liabilities, guys. We're just about to end this. Now, with the materials, earlier, the creditors for materials were for 4,000 units, and hence now it's a double shift. So we are looking at, okay, 4,000 into 2, 8,000, and they gave us discount of 5.4. So that's so nice of them. We are having our creditors at 43,200. It could have been exactly double. I could actually calculate something else also. I can calculate another way. You had creditors for 24,000, guys. Your requirement doubles. 24,000 into 2, how much? 48,000 minus 10% discount. So you can get a 43,200 alternatively. But I would still say go with the tabular approach, go with the per unit approach. You will not do mistake. Okay, because you are doing consistently the same for other parameters. Someone said, Pooja said, how did we get 12.4? Pooja, we did the statement of cost. If you see before the profit in 48,000 in double shift, my cost is coming down as 12.4. That's the total circled in dark red. That is coming from the statement of cost. Make sense, everyone? Okay, now we already calculated the wages and expenses. So wages and expenses also had a reduced rate, guys. Wages had 3 plus 1 as 4. So new wage rate is 3 plus 1 because 3 was variable and fixed got down. So 4, and expense you had 1 plus 2. That's 3. So we are using the new cost structure here, 4 and 3. That is multiplied by not 1,000 but 2,000 now, because my units have doubled here. 1,000 into 2 into new cost. So hence we are getting a current liabilities of 57,200, and the gross working capital was 3,44,000. That means my working capital is 3,44,000 minus 57. We are getting 286,800. But mind you, my question was not the working capital. My question was additional working capital if the policy was to work in double shift. Additional change in working capital. That is why we were required to calculate both the working capitals. Single shift, double shift. Difference will be the additional working capital. Single shift mein we had a working capital that was 1,92,000, but in terms of the double shift, we are having a working capital of a 2,86,800. So we are in nutshell having an additional working capital requirement of a 94,800 here. Guys, I hope everyone is clear with this. Very interesting question. Need to be very careful. I think small points. Initially, you might take time to understand this, but maybe what you can do is after the class, attempt this on your own. And as I said, guys, homework for you is to do all the practice, whatever we have covered, and try to do more questions based on the working capital from your previous year exams, and also read an alternative solution. We'll not be covering that onto the class. On Thursday, we'll be moving on to the respective aspects of individual elements. We'll be talking about the cash budgets. We'll be talking about receivables management. So all that will be discussed on the credit policy and all on the Thursday. So a lot to cover, guys. We also talk about factoring of receivables. So I think Thursday's class also will be full of action, and a lot of homework will be given to you in terms of questions. But don't worry. We will be having solutions as well for the same uploaded on the portal for you day after your lecture on Thursday. So again, guys, thanks a lot for joining in today's evening. I think we should wrap it up now. It's almost 8:40, and I thank you all for joining in. As always, it was absolutely mind-absorbing session, I guess. You were all enthusiastic, so thanks for your participation, and your two-way traffic always keeps me busy, always keeps me on my toes, and that keeps me enjoying these sessions with all of you. And I'm pretty sure that you guys are all equally energetic to do more and more practice. And definitely the 3 golden words, which I always keep on saying: your hard work, discipline, and dedication. I'm sure that will be paid off. See you then on Thursday, guys. So have a good evening. Stay healthy. Stay safe. Cheers. Yes.